Howdy traders, it's Dale here. I hope this video finds you in good trading. Got a trade set up here that was brought to my attention by actually a War Room member, Miles. He actually pointed out this large bullish rejection candle here on the US dollar Swiss franc 4-hour chart. So I have been looking at this market for a buy signal for a little bit. And this is where top-down analysis really comes in and helps us build value into trades like this, because from the 4-hour perspective, you know, some people might be intimidated because you can see there's a bit of downward momentum and maybe they'll think we're going against the trend or something like that. Or if we just have a look at this overall market structure, it looks a bit confusing. I'm not sure what's going on. Maybe you might say it's trying to go range bound or something like that. So this is where the clarity of the higher time frames comes in and helps us build value into signals like this and filter out the good from the bad. So the idea of top-down analysis is where, well, I like to start off on the weekly chart and just see what's happening there, gathering information. And basically the idea is we start off from the top and we build our analysis down into where our signal time frame is. And what we're trying to do there is basically synergize all our analysis so that all the time frames kind of align and give us the same kind of conclusion. So we'll start off on the weekly chart, and the weekly chart, yeah, just bullish at the moment. We're not really at any critical turning points on the weekly chart, but that's okay because ideally when I'm looking for those critical or key turning points on the weekly chart, that's where I'm looking to build value into counter trend positions. So because we're trading with an existing trend here, I'm not too worried about those major levels on the weekly chart. We don't have to be at that major reversal level. It's not critical. It would be nice, obviously, to take in trades from there, but when we're trading with the trend on the weekly chart, we're just looking for any warning signs. I guess if we were up against a major resistance like here, then I would be very wary about buying through that. So that's the kind of information that we could gather from the weekly chart when we're actually trading with the trend. You know, you hear the saying, oh, trade with the trend, it's your friend, the trend is your friend. But that's not always the case. This is where top-down analysis can help you here as well. You want to trade in position of the trend, and you don't want to trade through these major structural levels because that's where you're going to get all the fake outs and stuff like that. So the weekly chart does offer some useful information. And then we go to the daily chart. So we're scaling down, and what we had in the weekly chart in mind, we're trying to synergize that. So on the daily chart, this is why I've been looking for a buy signal. Okay, I'll zoom in a bit. We can see a very nice trending structure here. We've got, you know, how do you determine a trend? In my books, we just look at the swing trading footprint. We're looking for higher lows and higher highs, and we can see that here. And every time we see the market progressing into higher highs off higher lows, basically that's a moving market. So some of you guys might identify this as, whoops, picked the wrong tool, as a channel. So we can see the channel boundaries. Let's try and draw this as perfect as I can. There. And basically, it doesn't really matter how you look at it. We can see we're on the channel boundary here. We've basically got 3 taps, 1, 2, 3. So you can pretty much qualify that as a decent trend line. But I'm going to remove that. But if you were looking at that as a channel, you would be able to say, yeah, okay, we're actually on the channel bottom here. But I was looking at it more of a trend perspective, and I can see, if you look carefully, there's actually a swing level through there. We can see this area here acting as resistance, all right? And then we can see the market actually break through, bounce off that level, come back, retest, and here we are again. Now this is what I would call trading in position with the trend, where you're actually at a place where a higher low is likely to print, where the market's likely to bounce from within the trend, and that's where these swing levels are very critical. So when I trade with a trend, I want to trade off the swing levels within the trend. I want to catch the trend after a counter trend correction has basically terminated, and that's what we're looking for, the signs that the counter trend or the correction has terminated, and that's how we get in with the trend with those price action signals that suggest that the high low is going to be printed. Obviously this is all reversed for a bearish trend. Now we have a daily doji, indecision doji here. So I was thinking about taking a break of a high here. So if the market actually did rally off this swing point here and did create a higher low and did actually break into some higher prices here past this doji high here, I was going to go in with that. But because Miles has actually pointed out there was a decent looking 4-hour signal there, I'm going to take that instead. But just going back to the top-down analysis, so what we got from the weekly chart, well, we established that we've got some bullish momentum, no obstacles in the way. And here on the daily chart, we can see that we are in position and at that critical hot spot within the trend where we should be looking for buying opportunities. We've got the swing level. We've also got the mean value here, which is a reference point I use. Generally, only in trending markets you can use this as dynamic support or resistance, and that's all lining up perfectly. So we're at a very good location to be buying from this trend's perspective. And then we scale down into the 4-hour chart and bring it all together. Basically, we've got our price action signal here. Now, we're on the 4-hour chart, so it's kind of like an early bird kind of signal. I don't trade the 4-hour chart too much, but when I get this top-down analysis really aligning for me here and building the quality in the trade, then it's very hard to say no to these kind of high-quality setups. So, like I said, just looking at the 4-hour chart, with that tunnel vision and not really paying attention to what's going on in the bigger picture, this might not look so good. Maybe it might to you, but to me, just taking this snapshot here and looking at this situation, I'd probably be like, yeah, it's not really that great. But when we do the top-down analysis, check from the top down and build all that quality into the trade, okay, we're starting to tick a lot of boxes here, and now this is starting to look like a really good trade. So I'm going to take this in front of you live. I'm going to use my trade panel, so let me open that. Okay, so here's my trade panel. This is a tool I made for MT4, and I'm actually converting it to MT5 as well because I'm looking to move over to that. But this trade panel just makes order placement really easy. You can do some advanced stuff with it. I have a YouTube playlist dedicated to this panel and what it can do. So if you're interested in looking at the features of this panel, then go check out that playlist. But what I'm actually looking to do here is probably enter on a retracement. I won't go the full 50. We'll just say 45%. That's pretty reasonable. And the stop loss I'm going to place below the candle low, and the target candle is going to be 1. Oh no, it's not. It's going to be, nearly made a mistake there. We've got to count from 0 backwards. So it's going to be candle 4. So we go 0, 1, 2, 3, 4. So we want it below candle 4. So I better make sure that that's set properly. And add pips to stop loss if you want. You can add some points or just add 1 there by default. Risk reward target, I think if we get this 4-hour entry here, I think it's going to be a boomer of a trade. So it's going to be a tight stop. So the reward potential is quite high, I think, especially going off what we've just seen on the daily chart as well with that trend. If we actually catch the next move into the trend's higher highs on the daily chart, we've got a lot of upside potential here. So we're going to be very generous with the target here, 1 to 6, which is a very, very good return on investment. You set your dollar risk how you want. That's one of the popular things of this panel. It's basically you traders just love the feature of being able to put in a dollar risk into your trade ideas and letting the panel calculate all the math behind the lot sizing and that. So that's a really cool feature. You really do need to start thinking about your trades is in dollar risk if you're not doing that already, because your account isn't made up of pips, it's made up of dollars. So you need to allocate dollars to a trade, not pips. And that's basically all we need to do. It's quite a simple trade setup, and we just hit the buy button and it's going to set that up for us. And what happened? Oh, I made a mistake. So we didn't target the right entry candle. That could have been fatal. So we also want to target candle 4. Let me delete this. All right, so now we are targeting candle 4 for our retracement entry, and we'll hit buy. And buy stop is there, so we should get if this starts to move up, we should get filled quite easily on this. And yeah, that's the trade setup. So our stop loss I like to put below the swing low. Some people may say, yeah, that's where the stop hunting happens and that. Yeah, there probably is a lot of orders waiting below the swing lows and that. But as far as I'm concerned, if the market does push below the lows here, it's actually going to be pushing into lower lows, and it's just going to ruin the whole trade setup. So generally, when you do the top-down analysis and you pinpoint the key locations where you should be trading from, and you do get a strong signal, the market should follow through with that and actually take off. So you can see the market's ticked up a little bit, and we've actually been triggered into a buy order, so that's good. We don't need the panel open for this, we can close it. And let's go to the daily chart and just see where that landed our targets. So not unreasonable at all. And you can remember from the weekly chart, I had weekly resistance marked there. We'll just confirm that quickly. Yes, that's a very good resistance level here. And I've even put the level just under those highs there too. So it's kind of a bit conservative as well. So we're well under that weekly resistance there. So when you set your targets, you really want to look at the weekly levels again as well. Do look at the higher time frames. You don't want to set your target, above that level, because the market's probably going to bump into this weekly resistance, and it may bounce off, or it may actually go through a full reversal, and you're not going to get filled. So always set your targets. Or keep the weekly levels in consideration when you do set your targets. So looks like we're in this trade now. And again, if you're watching this, Miles, thank you for pointing out this trade setup. And I'm going to leave the trade here, and I'll come back as usual in the conclusion part of the video, and I'll show you how the trade unfolded. Okay, back with an update. This trade has progressed very nicely. That trend actually continued to pick off. There's the original signal back here. And as you can see, the market, first challenge here was to get past these higher highs. Obviously, that was our first goal. So if we go back to the daily chart, wasn't really too worried about that, because you can see the higher high, higher low pattern here, and in a trend that's likely to continue. So you shouldn't really worry too much about these swing levels. If the market's trending, there's a good chance it's going to push into high highs or lower lows if you're in a downtrend. Of course, going back to what I said in the first part of the video, I think I said those major weekly levels are what you got to avoid trading into. So what I've done here is, here's my entry. What I've actually done is moved my stop loss up to lock in 4 times profit, which is a really good return on risk. I was aiming up here for that 6 times target, but you can see that the market actually, I think there was a bit of news or something that came out around the Swiss franc, and it just a couple of points away from hitting my target there, just spiked up. So if we go back to the 4-hour chart, you can see that very close to hitting the target there, and now we've actually got something a little concerning. That's why I locked in the Forex profit there. We've got this really large bearish rejection candle here. So since I almost hit my target, the trade's basically, it could be coming to the end of its life here, especially with this very large bearish rejection candle here. Probably not really willing to sit through another correction. I was hoping to hit target on the next push into higher highs here. So what I'm going to do is just probably leave the stop loss now, the trailed stop, and the target where it is. We're probably about 40 minutes out of the US session, so I'm actually going to hold this and see what the US session brings, because the US dollar might become quite bullish in the US session and drive this up further. This could just be news noise here. Not interested in selling here. Again, going back to that weekly top-down analysis kind of stuff, we're a little bit off position from the major turning point. Now that sell signal on the 4-hour chart, or that bearish rejection candle, not really going to call it a sell signal. So the bearish rejection candle on the 4-hour chart may well generate a bit of a sell-off, but if we're going to actually go counter trend, I really want to see the signal of the weekly resistance here. You can see very strong resistance, as I pointed out earlier. So we're a little bit off position, so I don't want to try pick tops here unless we're backed by the weekly structure. So basically trapped some profit here now. So I'm either going to get 4 times or 6 times, and I'm just going to let the trade roll out and see what happens. If we're lucky, the market might actually move up and hit that 6 times target, and we'll come back and see which one got hit. Hey guys, back here, and mission complete. We actually hit the desired target of 1 to 6, which was a just above here somewhere. And yeah, that's just a good example of how it's not always about candlestick signals. A lot of newer swing traders or price action traders would have seen this signal and started drilling over it and couldn't press the sell signal fast enough. So yeah, it's just a little side lesson. It's not always about candlestick patterns. You have to actually build quality into them and do some quality control. And that's where some top-down analysis can really come in and help, especially when you're trading on the intraday swing trading timeframes like the 4 hour to, if you got access to the 8 hour, 6 hour, 12 hour, those guys. As I said, the weekly chart shows us where the real main turning point is, and I told you I wasn't interested in selling that candlestick signal because it wasn't really on the turning point. It's very clear where that structural level is on the weekly chart. So that was a nice little quality control filter for this. And you can see that there's a uptrending pattern at the moment. Sure, it might have caused a correction. We could have seen a correction come out of this, but the profit potential on that would have been quite low, or the expected profit potential. So this is really nice. So this is a nice example of so the original trade was down here. So we caught a really nice move and did the top-down analysis. And it's really nice when you do your technical analysis and build value into a trade with the information you have in front of you, like the price action and the structure of the market and your technical analysis and things like top-down analysis as well. So it's really nice when you can bring all those things together, pick out a trade and make a nice profit. But although I did gain 6 times profit here on my risk, I did have two losing trades the other week. That obviously brings my overall profit down to 4 times. So that's the whole philosophy behind positive geared risk reward in your money management model. The winners, when you get them, they should really outperform the losers. And a 6 times win here, that just cleans up previous losses and puts you straight ahead in profit. So this is a nice price action example for top-down analysis. I hope you enjoyed it. If you like this kind of stuff or you're interested in learning, I have a website, theforexguy.com. You can come and check it out. I try to update the content on there as much as possible, but I'm always involved with some Forex projects that do require my attention, and I can only focus on one thing at a time. Same with the YouTube videos. I always get comments about YouTube videos. Do more. I try to, but these videos are a bit time consuming to put together and edit and everything, so I don't have... I can't just churn them out. But I'll try to get as many out as possible. So yeah, hope you enjoyed the video, and best of luck on the charts.